Hello, everyone. My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is October 27th, 2022, and there is indeed highly likely a larger move up before any considerable correction in Bitcoin's price or in most altcoins' price. Okay, we're going to do that analysis today. If that interests you, then definitely stay tuned. Hope you're having a great day. It's nice and sunny in the DC metro area. All right, let's get into it. Let's start off today with Bitcoin, okay? And what we're going to do is we're going to look at Bitcoin briefly, and then we're going to jump to the DXY. We're going to have a peek at the SPX. We're going to look at Bitcoin dominance, and we're going to go back to Bitcoin and do a more in-depth analysis. So, the overall analysis hasn't changed since yesterday. Yesterday, we put this Elliott wave count up, okay? And for those of you who understand the rudiments of Elliott wave theory, when you're looking at an impulsive wave, an impulse is an advance, as Ralph Nelson Elliott would call it. It occurs in 5 sequences: 3 waves up, 2 waves down, or 3 positive waves, let's say, and 2 negative waves, because it can go either up or down. It doesn't matter. It's ambivalent, or it's directionally agnostic, okay? But here we counted a wave 1, wave 2, wave 3, wave 4, and we're currently in wave 4. Now, wave 4 has 2 characteristics that you typically see. The first is that wave 4 typically yields a complex correction vis-a-vis wave 2, okay? So what typically is observed is that wave 2 is a relatively simple, sharp correction, and wave 4 is relatively complex and flat, okay? That's the guideline of alternation. The other thing that we typically observe in wave 4, I say typically, okay, because this is all probabilistic, there's nothing that's 100%, is that wave 4 typically ends between the 0.236 to 0.382 Fibonacci retracement level of wave 3, okay? So those 2 things seem to be happening, okay? Yesterday we said it was likely that we hit this wave 4, and we are in wave 4, so we should expect for price to range in a flat correction of some sort in this region, okay? And this is the beauty of, being able to read waves and read price action and understand, more or less what's likely happening. It's like a lot of people are panicking right now because the price isn't shooting up. But what's interesting is most of the time, price is in correction, okay? Most of the time, price action is corrective. Smaller periods or smaller periods of time do you find price in impulse. And so the trick is, or the goal of any good analyst, any good trader, is to understand corrective price action. I always say this. If you know corrective price action, you can tell if you're at support and you're moving up, or if you're at resistance and you're moving down, okay? So you can prepare for these moves right here and right here, okay? We care about waves 1, 3, and 5. That's typically where we make money. Seldom do you make any money in waves 2 and 4 because you're just going sideways, okay? But it's important to be able to accurately read and analyze and kind of recognize these intermittent corrections, these intra-wave corrections, so that you know what price is likely to do afterwards, okay? And I don't think you need to be an Elliott wave pro or genius to figure this one out. I think this one's pretty straightforward, and we're going to look at it in terms of typical, regular, straightforward support and resistance in just a second. But back to my point about the wave 4 ending between the 236 and the 382 Fibonacci retracement level. if you take this wave 3, let's say this is the bottom of our wave 3, and this is the top of our wave 3, this is exactly where we perceived price to hang out in this level, and that's exactly what happened. Okay, so since yesterday, nothing's changed. We've been floating in this area. Meanwhile, if you make use of some indicators, and let's pop on our stochastic RSI indicator, what do you see? You see that the stochastic RSI indicator on the 4-hourly time frame now, that was overbought, okay, meaning it was overheated, right? You could see it right here, overheated, and typically what happens is when it's overheated, it comes back down. It's been coming down in momentum, whereas on the price action, right, in price, it hasn't been coming down much. That is very bullish, and that corroborates our read of our being in wave 4. Does that make sense for everybody? Like, you know, all of these things are just probabilistic. So we establish a thesis and say, okay, this is probably wave 1, this is probably wave 2. We measure wave 1, retracement of wave 2. We get this wave 3 between the 1618 and the 2 Fibonacci extension of wave 1. We say, okay, this is likely a wave 3, okay? All of this is probabilistic. And then we say, okay, if that's wave 3, then let's take the retracement of wave 3, calculate between 236 and 382. If price stays in this region, it's most likely a wave 4. That's exactly what's happening. And as you can see, your Fibonacci retracement, your momentum indicator is resetting, okay? So all of that corroborates our read. Dropping down into the hourly time frame, you see it even more. You see that we are, how could I say this? You see that we're prepping for a move up that much more clearly, okay? On the hourly time frame, you can see that we're creating all this bullish divergence right here. On the momentum indicator, really, really strong momentum. We're staying oversold pretty much. So for a lot of people who don't know how to read waves, and they're probably thinking, oh, we're going to dump because they don't know what happens after a consolidation. We stop, they're like, oh, we don't know what's going to happen, right? They only recognize, you know, when we're going up or when we're going down. But the trick is, if you really want to say you can read price action, if you really want to be able to have an edge, you got to be able to read these sideways price action regions, okay? So judging by what you see on the hourly time frame, it's even more clear that this is a consolidation and that you're pretty much going to continue this impulse. So you have a trend, a consolidation, you're going to continue this trend, okay? So that's what is likely given our reads, okay? So that was the Elliott wave analysis. The other thing you could do here is just look at it very simply in terms of support and resistance. What do I mean by that, okay? I mean, look at this W pattern, okay? And look at this very clear resistance that we're at, that we're just now, we broke through and then we're retesting as support. What do you think the target for this is? It's very simple, right? How is it very simple? Let's pull out a proper tool to depict this. And for this, we need our... This is a tool I don't use often, so I'm going to have to look for it. Guys, if you're getting value, please like, share, and subscribe. I know it's here somewhere. It is... It's not the head and shoulders pattern. I don't even know what a 3 dives pattern is, to be honest with you. If I can't find it, I'm just going to leave it. But I want to say that I've seen it. I want to draw a proper W. Anyway, it's not important. Okay, let's just draw it out by hand. Let's draw it out by hand. Or, I mean, we could just do 2 triangles, yeah? Let's do 2 triangles. Let's try that. Yeah, that works. Okay, let's try that again. Okay, that's essentially what you're getting. It's 2 triangles, right? This is a bullish pattern confirmed by the break of the resistance, which is basically here, the neckline right here. And you're basically in this wave 4 correction, retesting that resistance as support. Now, as with any other pattern, when you're doing pattern analysis, it's very simple. The target, the technical target, is going to be the height of the biggest vertices, or vertex rather, which is probably this one, right? Something like this, to the neckline. So let's just say here as an estimate, and that gives you the target, okay? Breakout from the neckline, that would give you a wave 5 of about 22.9, around 23K, okay? So that is our target, just doing pattern analysis. Now, if we were to go back on the smaller time frames, let's get rid of these triangles just to clean up our chart, keep it nice and clean. And let's go back on the smaller time frames. Let's go on the hourly time frame. And what we're going to do here is let's see what that would mean in terms of our Elliott wave analysis, okay? I hope you guys are following me here. Now, let's say so far we've counted this correctly. This is wave 1 and this is wave 2, okay? And wave 3 ends between 1618 and 2 Fibonacci extension. Whoops. And that's exactly what we got. Wave 3, you know, came right here between 1618 and the 2 Fibonacci extension. Again, wave 3 can be extended, wave 3 can be truncated, but wave 3 typically, balance of probability, ends between the 1618 and 2. That's why we project wave 3 to that region, because more often than not, that's exactly where you find wave 3 ending up. And then here we can count. We can count 1, 2, 3, 4, 1, 2, 3, 4, 5. A nice ending diagonal in wave 3. Okay, we can count that. And this correction is breaking down this ending diagonal, this rising wedge. And how do rising wedges break? They break to their origination point, okay? So wherever they were formed. So that's pretty much what you're getting here. Okay, a lot of things line up. Now, you had a regular wave 1, a regular wave 3. Now, if we were to go all the way up to 23K for wave 5, as the pattern analysis suggests, right? Then that would mean we're getting some sort of expanded wave 5, okay? Because wave 5 is typically the same size as wave 1, okay? And if another way to project wave 5 using wave 3 is to simply take the length of wave 3, retracement of wave 4. Let's say wave 4 ends around where we're at right now, or the low of where we're at, and then project the 0618. Okay, that would be one way to project wave 5. Other way to project wave 5, you could take the inverse 1618 of wave 4. So that would give you a similar target around 21.4, 21.5, okay? But that's not what the pattern analysis suggests, okay? The pattern analysis, once again, let's put that back up. Yeah, that was right. Suggests that wave 5's coming between the 2618 and the 4236, which is something I'm seeing over and over again, and I'm not exactly sure what that is. Is that the... what is that? The 3? Let's see about that. I've seen that on multiple projects. That extension. Let's try to see what that is. Okay, and whatever that is, we're going to keep. Okay. I'm not a mathematician, so it's between the 3236 and the 3414. What are the Fibonacci? Anybody know offhand what the Fibonacci levels are in the 3 range? 3, let's say. Maybe it's that 3382? Let's try that. Let's try 3382. Okay, let's get rid of this. And let's do 3382. Actually, let's get rid of this. And let's do it with the purple. 3382. Let's try that. Okay, maybe. Maybe. It's close. It's really close to the 3382. I would say the 3382. Okay, I'm gonna keep that on. Actually, let's make that blue. I really liked whatever color that was. I was digging it. It's this color right here, which is the 6854. What the hell is that? Okay, I'm just gonna get rid of the 3618. Or should I just keep all of this on? I'm gonna keep all this on. I'm just gonna keep it like this, okay? So I think we're targeting the 3382, and like I said, I've seen this in other projects, so we're gonna have a look. We're gonna just leave it on there and see. Yeah, so that's Bitcoin, and I guess, you know, we ended up doing all of Bitcoin's analysis. Oops, 4 hour. That's pretty much Bitcoin. So, you know, we're here, and I think we're targeting 23K for that reason, okay? And 23K is going to take you up and to this resistance right here, right? So you're going to make this pattern probably going to correct like this, and that will make a very nice inverse or cup and handle, if you will, right? That's a cup and handle before continuation, a bigger continuation. And that's essentially wave 1, wave 2 situation. So I do believe that we're targeting 23K for Bitcoin, okay, for all the reasons I stated. And I believe that wave 2 is going to be a relatively significant retracement. But again, wave 2, we should expect it to retrace to around the 0.618 of all of wave 1. So if we go to 23K, I expect Bitcoin to come back to 20K, 20,200. All right, and maybe even dip down and hit 20K, but no more, okay? Because it's 5 waves up, 3 waves down, respecting the 0.618 or phi ratio of the preceding 5-wave impulse. So that's what I'm seeing for Bitcoin, and I know a lot of people are really confused, and a lot of people, I know, because shorts are paying for longs, because a lot of people are starting to go short because they don't know exactly what's going on. They think it's a fake out. But if we go up here, this is when a lot of people are going to be like, okay, we're definitely not going any higher, and then creating that 3-wave move. But again, as you all know, I'm prepared to withstand any kind of, 0.618 retracement, because my stops are going to be hidden behind every single last 0.618 retracement of my leveraged or margin positions, because I understand that in an impulse you can retrace to the 0618. That's a normal retracement, right? I do expect that before continuation. Now, the other thing that's on the table is that this is intra-wave, okay? Even though there's a target here, right? A technical target of 23K of this W pattern, that doesn't necessarily mean that we have to stop here. This can be an intra-wave retracement, and we can very well continue on and on and on for wave 5. It could be a lot more extended than that. So just keep that in mind. You know what you don't know, and you're clear. I think as a good trader, as a good analyst, you're clear on your unknowns. There are no knowns, as Rumsfeld says. No knowns, known unknowns. And I think a good trader is always clear on what they don't know. And sometimes you know that there's things you don't know, but you're just clear, and that's good risk management. Because if you think you know everything, then you're really in for it. But we know that this can continue. But it's likely for us to find some resistance here, put in that 3-wave move before continuation. So that's Bitcoin. Yep. All right. Now, what I want to do is I want to peek at the DXY. Okay. What's the DXY doing? Firstly, on the hourly time frame, is very clear. My indicator, my trusty stochastic RSI indicator, is telling me that the DXY is overbought and it's about to turn around. Okay, it's completely overbought, it's overheated, and my price action is telling me the same thing. Okay, I'm looking at my price action, and what do I see? Very simply, I see a pivot, and then I see a 5-wave move. Okay, remember, Elliott wave says that every impulse goes in 5 waves. Afterwards, you get 3 waves. Okay, so we got this correction here. Okay, but it's actually a 3-wave correction. That's not like a regular, 3 waves to continue this 5-wave impulse, right? Because this 5-wave impulse was part of a corrective sequence, right? So that's an A wave. It's not a 5-wave impulse. We're going to put in wave 1, wave 2, and then wave 3. No. It's 5 waves as a part of wave A, wave B, 5 waves. So A, B, C. Those 5 waves, okay? So you see that right here? So that's essentially a break of structure right here, but it's still corrective. So you get an A wave, that's corrective. You get a B wave, that's corrective. Actually, sorry. Yeah, I'd say that is your B wave. That's another A wave. Expect another pivot, and then a continuation. Okay, so you're putting in consolidation reversal pattern. Okay, I talk about that a lot on this channel. So 2 degrees of AB basing. That's exactly what I'm seeing going on. And so you're gonna stay overbought until you put in that move. But that's what's going on with the DXY. You're essentially doing an intra-wave correction. Okay, so if you zoom out, that's very clear here. Your trend, your overall trend that you're still in and you haven't broken is down. Okay, and all of this that you see is intra-wave correction. Yeah, intra-wave correction, more. So that's what you see. That's what I see. This is likely a wave 2, right? This is likely a wave 4. If we were to take our Fibonacci extension tool to measure it, let's see what we get. If this is wave 1, let's say that's the end of wave 1. This is retracement of wave 2. I don't know. Because that's then a truncated or concerted wave 3. that you're getting here. Do you see that? And that's not what you typically get. It's possible. It's not what you typically get, though. Okay? It's a concerted wave 3, which would mean after all this is done, you're going to get an extended wave 5. Okay? And that extended wave 5 is probably going to be right here. This size. This is the technical target of this breakdown. Again, W or M patterns, same thing, right? It's just the inverse of what we're seeing with Bitcoin, and that makes sense, right? Because the DXY is inversely correlated to Bitcoin. So what you see, we say Bitcoin is likely going to put in the technical target of a W pattern breakout, and it's no wonder the DXY is most likely going to put a technical target in for an M breakdown. Okay, so I think whatever you get here, whatever this is, once this breaks, you're targeting, let's clean this up, and let's do the same thing that we did with Bitcoin, except with the DXY. Again, if you're getting value, please like, share, and subscribe. It would be something like this. Okay, that's one. Let's say this is the second one. Okay, I want to keep the same. Yeah, I'd say it's like this, okay? Because that, you can't have a neckline that's like crooked, okay? So I think the neckline's contiguous in this way. A straight line, okay? And that makes sense, right? Because you see that there's some resistance there. You bounced, and then you broke. And I think here you broke. You're retesting this 14-year resistance, now it is, because we're under it, this dotted line, and then you break down, okay? And that breakdown is going to be the height. Let's get an arrow. Yeah, this will do. The height of this, let's say right here, yeah? The height of one of the vertices to the neckline, superimposed from the side of breakout, which would be here, or breakdown. And this is your target right here, 106.28. Okay? And once this breaks down, I think you're going to continue to break down and continue to break down. That's going to be the end of one of your waves. You probably get an intra-wave correction, and you continue to go down and continue to go down. I think your final target is down here in this blue box. Why? For many reasons, but one of which is, again, you made a rising wedge. We talk about this quite a bit. Rising wedges break down to where they were formed. Okay? That's one reason. Okay? But the main reason I have this C wave coming down here is like I'm using Fibonacci retracement levels to measure that. I believe I am. Let's see if we can't remember how I got that blue box. I don't keep my analyses committed to memory necessarily. I just do it anew every single time. So that's why I don't really remember. Yes, I remember why. Okay. So the theory is that in an extended wave, okay, an extended impulse, the initial break of structure, which this is, it seems like, it's not, but this would be all of this three-wave move right here would be the initial break of structure, okay, a big A wave, and that initial break of structure targets wave 2 of the impulsive events. That's why I have that blue box straddling this wave 2. Okay. This intermediate wave 2, right? Because it's wave 2 of the lesser degree. Not the primary degree, but the intermediate degree. I hope that makes sense. I know it's quite technical. If you're not like an Elliott wave buff, maybe that doesn't make sense, but it's fine. You can use pattern analysis and just look at the pattern, and the pattern's quite clear, right? This was resistance broken. You get rejected. You come back down to your broken resistance as support. That's it. No fancy Elliott wave necessary. Okay, so that's my look on the DXY. That's why, for people who say we're gonna break down more and we're gonna go down to zero, like, I don't know what they're looking at, to be honest. I'm not trying to be adversarial or anything, but honestly, like, how do you look at what the DXY is doing and have a bullish take on the dollar? I just don't get it. Because if you say Bitcoin's going to 5,000 or 1,000, whatever they're saying, you have to be bullish on the dollar. The dollar's got to make big moves, okay? And nothing indicates that it's doing that. So, all right. Let's now have a peek at Bitcoin dominance. So Bitcoin dominance, as we've been saying on this channel, if it breaks down, it's a great sign for a crypto pump, for a crypto bull market, okay? Because Bitcoin dominance, a measure of the percentage of market cap that Bitcoin comprises of the total cryptocurrency market cap, it only breaks down when you're in a bull run. Okay, so if you see Bitcoin dominance breaking down, that's great. Okay, and that's exactly what we're getting here. Again, rising wedge, breakdown of the rising wedge, retest of the support that you broke as resistance, and then a continuation. That's exactly what you're getting. Okay, this is exactly what you want to see if you're bullish on Bitcoin and other assets. And I don't know if many people in this space, right, understand that. Like, I know a lot of Bitcoin maxis think Bitcoin dominance should rise. That means Bitcoin is going to go to the moon. No, if Bitcoin dominance goes up, that means Bitcoin's going down. It's just it's not going down as much as the other assets. But yeah, whatever. And then I guess the last element we want to have a look at is just the traditional markets, which should also be going up given that the dollar is going down, right? So let's just have a peek at the S&P. And the S&P, much like Bitcoin, is in a type of intrawave correction. Quite clearly, okay? You have this advance that started, and you're going up, and you're consolidating. You've been consolidating at a level that, kind of like Bitcoin, is on top of a W pattern. You have a W pattern. You have a resistance that you just broke, retesting that resistance as support and continuing. And that continuation, which should be your wave 5 or your final leg, should be the height of this W pattern, right? Superimposed from the site of breakout, which should give you something like 4,144, something like that, around this area right here. Okay, so what you're seeing in the SPX, it shouldn't surprise you. You're seeing similar things in Bitcoin. It's the same analysis, more or less. Now, on the higher time frames, what the SPX and the traditional markets are doing cannot hold a candle to what Bitcoin's doing, because this is in the context of a corrective rally, meaning what you're seeing in SPX, what you're seeing in traditional markets, right? It's still in correction. Look at this. This is the first phase of the correction, second phase of the correction, third phase of the correction. So even if you do go up here, you're going to pivot and come right back down, and probably much lower than where you were even, okay? So you could say in some way this is a sucker's rally, or you could say in some way this is a bull trap. But I mean, you got to be really asleep at the wheel to get trapped, because you do have ample time. I mean, this is quite a substantial run up, so you have ample time to sell out up here, or even up here, right? You have time to sell out. But make no mistake that you're eventually going to need to get that third leg. And we explained why many times over why, you know, the analysis is this way. And even before, you know, we turned around here and everybody was saying you're going to break down, we were saying on this channel that, yeah, you're more than likely to turn around for, you know, X, Y, and Z reason, but especially since you never put in that counter wave, okay? And that's what we're getting right now. So, yeah, if you want any more explanation as to why you're more than likely to get this last leg down in the S&P, then let me know. If not, let's move on. Let's get back into crypto. That's what we know and love. All right. Let's go back to where... Yeah, great. Okay, back to crypto. So we talked about Bitcoin, talked about Bitcoin dominance, talked about the SPX, talked about the DXY. Let's now look into altcoins. Okay. So this is my watch list. This is everything that I have exposure to, more or less everything. I think there's one or two things that I left off that I have very little exposure to. It's not even worth tracking. It's like one of those things I'll wait a few months and you know, take out of a wallet and have a nice dinner or something. But it's nothing that I can do much with. Here, let's take a quick water break. All right, so let's look at the altcoins. Let's look at Cardano. First one, Cardano looks really clearly to be in an intra-wave correction. Okay. Why am I saying that? It's because, just like Bitcoin, you broke a certain resistance and you're retesting it as support. Okay? You broke a certain resistance, like soundly, with a really strong move up, and you're retesting it as support for continuation. Okay? This is not a reversal. And this is what a lot of people are failing to see. Right? They're thinking this is a reversal. No, we're in pure impulse, right? As of the 21st of October, we started pure impulse in Cardano, okay? And so that's what you should expect. The other thing is, just like we were saying with Bitcoin, as you're consolidating here, okay, in this intra-wave correction, which is likely a wave 4 correction, you're getting a resetting of the momentum from overbought to oversold. This is a clear indication that whatever is going on here is not a distributive corrective pattern, right? It's not like we're doing 2 degrees of AB basing to sell off, okay? It's 2 degrees. It's not 2 degrees of AB basing. It's kind of a complex flat correction, which you should expect in wave 4, right? Since wave 2 typically gives you that sharp, you know, quick, relatively simple correction. Complex wave 4 correction, a resetting of the momentum, and then a continuation to wave 5, okay? And here, for Cardano, I think you can do something similar to what we did in Bitcoin. So if this is the resistance that you broke and you're retesting as support, you simply take the height of this move from the bottom to the top, superimpose from the side of breakout, and that is your wave 5 up here somewhere, okay? And that's what I expect. Again, just like in Bitcoin, don't be surprised if you go beyond that, because this may be an intra-wave correction, or it could be the terminus, or, you know, the end of this impulse, after which you get your you know, wave correction. But, you know, definitely, or not definitely, but more than likely where we are now is at an intra-wave correction and expecting continuation. Okay, jumping down into the smaller time frame, just like in Bitcoin, it's more clear than not that you can see we're completely oversold on the hourly time frame and creating. I'm trying to figure out if we're creating bullish divergence. I don't see any bullish divergence yet, but we're completely oversold and double bottoming, okay? So this is a really good indication for continuation, all right, in Cardano. Polkadot, same thing, right? But it's even more clear in Polkadot here, where what you broke as resistance, right? You guys seeing this? You know, real simple, nice and simple. Sometimes people want to complicate things. You want to complicate things for yourselves. You know, good analysis is relatively simple, straightforward. It doesn't take like a 1 in a billion type pattern, you know, that you never ever see. And oh, it must be that. No, no, no. It's typically really straightforward. And sometimes, you know what? Even being an Elliott wave guy, if you don't need Elliott wave theory to explain it, what's the point? Just explain it using simple pattern analysis. And simple pattern analysis says, this broke the resistance, we retested it as support, now continue. The target, quite simply, is going to be the height of this pattern, this W pattern that you formed, which yields a move to the top right here. So around 728, right? What a lot of people are going to get wrong and a lot of people are going to get confused by is if indeed this represents the top of this move right here, that subsequent 3-wave move down is going to shock a lot of people. A lot of people who are going to FOMO into these trades and their stops. So let's just do this real quick. Oh no, that's not it. Right here, let's try that again. So this is the bottom of the wave sequence. This is likely the top, okay? Something like this. And you see the phi ratio, the 0.618, should be, if that is the end of this wave sequence, the 0.618 should be where we are right now. So right where this, you know, right where we are now. So a lot of people, what they're going to do is when we start going up, they're going to buy. They're going to try and get involved, okay? And they're going to be like, woo, bull market's going. And what's going to happen? 3-wave move. They're going to be confused. Oh, no, we're going back down. We're going back down. And their stops are going to be in this region. Liquidation points in this region, okay? But the savvy investor is going to have stops and liquidations beyond the 0.618 of that move. Does that make sense? So just again, I've said this a million times on this channel. Measure the measured move. Okay, so take the measurement of the measured move, whatever it is. Take the Fibonacci retracement of it, and hide your stops and liquidation points beyond the 0.618 ratio of that. You should be good in theory. Okay, and a lot of times that works. Again, nothing's 100%, but if you're measuring correctly and if you're correct in your analysis, you don't get stopped out that way, and you can take part of a move in a move rather. So again, kind of like what you see in Cardano, you're resetting your momentum from overbought to oversold just by going sideways. That's very bullish. Okay, that's DOT. Ethereum. Ethereum is a little further along, but it's still what I think a wave 4 situation. Okay, if we count this as wave 1 and this wave 2, this is a wave 3, this is a wave 4, and let's just measure that using our extension tool. So this would be a wave 1. That wave 2 is quite shallow. Sorry, one sec. Let me just measure that. Because we know wave 2 has to be minimum 0382 retracement. Okay, do you see that? I eyeballed it and I was like, I don't know. And literally, we just touched it. We just touched the 0382. Okay? That's just enough to be a wave 2 retracement. Okay? That is really, really bullish. Thing is, the time doesn't work. Let's see something. Yeah, that's 2 days, 8 hours. Yeah, there's no way. 16 hours. Yeah, doesn't work. Yeah, no. That doesn't work. That doesn't work. Wave 1 has to start down here. This is tricky. This is a little tricky. I'm not gonna lie. It's a little tricky. It's a little tricky. Yeah, this is a little tricky. I think I don't know exactly what to make of this, right there specifically, but I think this is wave 1, wave 2 situation, and wave 1 starts right where I started my squiggle. That's the only way the time and the price can work out, or else it's not a likely wave 1, wave 2 situation. So I think it's something like this. Okay, and let's just measure really quickly with extension. But yeah, wave 4 usually lulls people to sleep. A lot of people are like, I don't know what to make of it. And there you go. I said this when we were looking at Bitcoin, didn't I? I said, I see a lot of targets in the 382, or in the 3 region, right? I wasn't exactly sure where it was, right? Because we just added through 382. Do you see that? Ethereum hit that wave 3, extended wave 3. It hit the 3382. Okay, so I think that is a thing. Here, I think you have an ending diagonal of wave 3. I think this is a wave 4. So in Ethereum, what you got was regular wave 1, regular wave 2, expanded wave 3. Now, what you're going to get is likely a regular wave 5. Why? Because we know in Elliott wave theory, you typically do not get 2 extensions. Is it possible? It is possible, but it's very unlikely. So it's likely that you get a regular, or just run-of-the-mill wave 5 if you had an expanded wave 3, and that wave 5 end up being about the same size as wave 1. Okay? So in terms of pattern analysis, that all makes more sense because, let's see, that kind of takes you to this region right here. I don't like it in terms of pattern analysis because I think the natural target is up here. Okay? The natural target is up here. So, another thing we can say with Ethereum, and Ethereum, there's actually one asset that I've seen that has put in double extensions, and that was Ethereum. I've never seen it on any other asset. It may exist, but I've never seen it on any other asset. Ethereum is particularly bullish, and it shouldn't come as so much of a surprise because remember, this is the asset that put in a quadruple halving or something like that. It's just fundamentally super bullish. Okay, 2 things. One thing is this wave 3 extension may not be finished. It may be that it's still ongoing. Okay, so that's one. Second thing is, we may end up getting that double extension, right, of an extended wave 3 and an extended wave 5. But I do think, just looking at, high time frame, let's get rid of this. Let's go on the let's go on the daily. High time frame, I like the idea, just in terms of support and resistance, of coming back to this region. This looks balanced. It looks imbalanced or unbalanced if we just stop in the middle right there, So for me, I was trading Ethereum, I would recognize all the things that I don't know about this impulse, and there are quite a few. So I would reduce my risk accordingly, right? I don't know when it's gonna all of a sudden stop and then retrace, right? So my stops are my risk assessment of this trade would mirror all of the things that I don't know. But just going off of a hunch and trying to keep things simple, I would not be surprised if we targeted 2000. Because you tend to get these nice and balanced regions. I think this is kind of a magnet here, right? This 2000 region. I think we get there before we experience any kind of retracement in Ethereum. That's just my hunch. And again, do you see how complicated an impulse with extensions can be to read? Don't underestimate Bitcoin. If this is indeed the beginning of a bull run, why think it's going to, always say it may go higher, right? It may go higher. I mean, let's look at Doge. Doge is up 10% right now, right? It looked like it had pumped 15% the day prior, and then I think 15% 2 days in a row. It's up 10% again today. And again, just keeping it simple on the daily time frame, I think this is the region we look for resistance, right? Don't have to use any fancy tools. Don't have to use the VRVP or VPVR, whatever you want to call it. Just look at price action. Price action says this should be some resistance, but anything before that, between here and there, it's just empty space. There's nothing really. So until Dogecoin hits about 9 cents, I would expect it to keep going, right? Let's see. So that's Dogecoin. Let's see. We were on ETH. Let's go to reserve rights. This hasn't done anything. Reserve rights has not done anything since it put in this correction, right? 3-wave move up, 3-wave move down. Consolidation. It hasn't done anything. It hasn't moved yet. So when it does start to move, these things, a lot of these assets, and you'll see it reflected in Bitcoin dominance, right? Bitcoin dominance is right now threatening to break this resistance, right? This support. It broke support, came and retested it. Now it's going to go impulsive to the downside. That's when you'll see things like reserve rights, I believe, and other altcoins really run. But this, for instance, has done nothing, right, with respect to, any upwards movement, significant upwards movement. Let's stay on the daily, because I think the daily is more relevant given what we are likely to experience. Synthetics is also in the camp of it's not done anything yet, in the face of this upwards price action. It's kind of still hanging out there. I think what you have here is sorry, I'm trying to figure this out. very volatile. At least it was over here. You know, this is super extreme volatility. It's hard to read. Let's go on the weekly. It's hard to read. You know what it looks like? I mean, let's pull up another chart just to make... Because I'm really having trouble reading with all of this, you know, these wicks. Yeah, let's do this one. The Binance. Okay, that's a lot better. Okay, it's a lot better. What has more info? Okay, you have substantially more information with KuCoin. It's from 2018. The Binance one is only from 2020. That's just so little information. Let's try and pull up one that... Let's try Phemex, and if Phemex doesn't have good history, then let's just stay with the KuCoin one. Yeah, let's just stay with the KuCoin one, regardless of the wicks. Okay, what I'm seeing here is, I think whatever this is, it's a corrective wave. It's a corrective sequence, okay? Obviously, it's a truncated chart. Hard to tell. But I want to say that this is some sort of running flat correction, okay? And if you are subscribed, you'll know I talk about the running flats a bunch. A regular flat looks... Okay, so running flat, like this. Regular flat looks like this, right? Where you come up and you come down at least to the region where you put in your inflection for that B wave. A running flat is bullish in that it is very intending, it intends to continue whatever trend was established with some sort of gusto, so much so that that ending diagonal usually, all right, that C wave, that impulse, is short, meaning it doesn't come down to the level that was set by the A wave. So that's what I'm seeing, you know, if I just looked at this and I try not to break my brain, this is a 3-wave move up, this is a 3-wave sort of a corrective move up, and this is some sort of ending diagonal. Maybe 1, 2, 3, 4, 5. And this was all a consolidation reversal. Okay, so that's how I'm looking at synthetics. So let's just treat it as such. Go on the daily time frame. Okay, and just focus on this. I don't really look at this on a high time frame much, but I want to because here I'm just trying to figure out what's going on here. Like, it hasn't moved, but at the same time, it's overbought. It hasn't moved, but it's overbought. I do like that read on the ending diagonal, though. 1, 2, 3, 4, 5. and ending diagonals are 3, 3, 3, 3, 3, right? So we can count that here. 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. So 3 waves in each. And eventually what you do is you put in your consolidation reversal, which is here it is. Okay. I don't know if I've ever done this, so this is useful. Initial break of structure targeting wave 4 of the previous trend. Okay, so that's your A wave. This is your B wave, which is a zigzag. Okay, so that's like a 5-3-5, right? And so this is your second A wave right here. That's basically the tail end of your 5-3-5. And then, yeah, I have done this. I must have done this because I kind of remember doing this. But the good thing about not kind of having one count and sticking to it is because I keep challenging myself, right? I'm going to do it anew. I don't really, if I had a bias on the first time that I did the analysis, I don't regurgitate the bias. I just do it with fresh eyes. So I like to forget. And then, okay, so that's, and then this is my last wave, my second degree B wave, which would be, this impulse down here. Okay, so there's 5 waves in here somewhere. And that should be visible on the volume indicator. Let's see, I don't see any capitulative volume candle. I do see a nice bullish hammer candle. Let's see. Okay. I feel like it's a 1, 2, 3, 4, 5 situation. Okay, so let's focus. Let's say that this is the end right here. Let's now focus on the price action since then. Okay, 4 hourly time frame. Let's get our bearings here. This is for synthetics. Okay, so this is what we're looking at right here. Okay, here. So again, this is what we're looking at. This is the end of the 2 degrees of consolidation reversal. And that happened on October 13th, where I said that Bitcoin also started being bullish, October 13th. And what you get here is an A wave, which is in 5, a B wave, which is in 3, another A wave, which is basically the second degree A wave, but all of that together makes a zigzag of 5-3-5, okay? And then another B wave, which is kind of a flat correction, so 3 wave, 786 to 1618 retracement of that secondary degree A wave. And now your impulse starts here on October 21st. That I like. I really like that count. I love that count. I don't like it. I love it. So this to me is a leading diagonal. 5 waves up, 3 waves down. 5 waves up, 3 waves down. 5 waves up. Okay, and I'm not surprised if this is kind of like a 1, 2, 3, 4. You need a wave 5 for this impulse right here. So this is what I'm seeing. I am seeing, because I wasn't sure I'm in this position. I just want to make sure that this, well, it's not making sure, but if I'm convinced that it's going up, I'm not touching the position. I'm not doing anything, you know. But I hadn't really read that thoroughly. So my target for synthetics is up here, actually. 326. Okay. It's essentially a large inverse head and shoulders. Okay. And you're breaking that resistance. You retested it as support. Your target's up here. And then that's kind of what I expect. I expect synthetics to move. Wow, okay, 33%. This next move up for Bitcoin and altcoins are going to yield the double-digit moves that gets a lot of people to FOMO in. But just like I said for Bitcoin, what's going to happen is, all right, let's just put this count in right here for this impulse. And the whole idea of the market starting to be impulsive on October 13th, or sorry, October 21st, is consistent. Let's see, this is, sorry, let's try that again. I'm getting really thorough. I mean, I love this show because it forces me to be thorough about stuff. 1, 2, 3, 4, 5. Where is this? I'm trying to read this. Sorry, 1 second. 1, 2, 3. Okay, so this is one of the few instances that I know of, or only instances, where you can retrace more than the 0.618 in a leading diagonal or an ending diagonal. Okay, this is one of those cases. It is not something that you see every day, but as you can see, wave 1 here goes up, wave 2 comes down more than the 0.618 of wave 1, wave 3 goes up. Wave 3 is actually the longest wave, which you should expect even in the case of a leading diagonal. Okay, and then another thing that this sort of, another rule, quote unquote, that this violates is that wave 4 comes into the region of wave 2. In the typical 53535, wave 4 never can come into the region of wave 2. Okay, that's kind of how you see an impulse. But on leading diagonals, both of those two rules, you know, strong rules that, you know, wave 2 only retraces to a maximum of 0.618 of wave 1, and then wave 4 never goes into the region of wave 2. You don't see that. You don't see that. And by the way, that 0.618 rule, it's not a rule, you know, officially, because of this case, I believe. And, you know, not a lot of people espouse that. The rules that you'll see written for a 53535 impulse is, you know, wave 4 doesn't come into the region of wave 2 doesn't go below wave 1, okay? So basically wave 2 can't retrace more than 100% of wave 1, and that wave 3 is never the shortest of the waves. So the only rule that you have to see in these leading diagonals, from my experience, is that wave 3 is never the shortest wave. And that's true here. This is a tough read. This is an advanced read, what I would call an advanced read. Most people aren't making this read. But yeah, my target for synthetics is up here in 320 something region. And once you get that, a lot of people are going to start FOMOing into these altcoins, into Bitcoin, all that stuff. Do expect a retracement that comes all the way back down here. Okay? And that makes sense, right? From a pattern analysis standpoint, right? You see that. This is the 0.618. What are you doing here? You have this nice inverse head and shoulders. You're breaking this resistance. What you're going to do is retest it, right, in a 3-wave move. Let's say boom, boom, boom. Let's say it's a zigzag. That 3-wave move is going to take just about as much time as it took for you to come up. So however long it took you to make these 5 waves up, that 3-wave move, you retest that resistance that you just broke up here as support, and then you continue into wave 3. A lot of people are going to FOMO into this, as it's printing, over the next couple days, double-digit gains, and then it's just going to fall right back to where it came. And a lot of people are going to have their stops and their liquidation points in these regions. That's amateur hour. You don't want to do that. So that's synthetics. That's my read on synthetics. I'm going to leave that up because that took a while to figure out. Okay. VRA. Let's see. We're going long today. It's fine. Some days you just got to get more thorough and really address all of these charts. But we're going to take our time. We're going to enjoy the process. I love my job. All right, let's see. So, okay, yeah, I'm seeing VRA in wave 2, quite simply. We talked about this being corrective, and AB, A wave, B wave, right? It's a zigzag, right? Because it looks like we respected the 0618 of this. So we started being impulsive right here. Again, close to October 21st, but this one looks like it was October 24th. So I think this is wave 1 and this is wave 2. So you're looking for wave 3. And I like that wave 1, wave 2 read for, the main reasons I like wave 1, wave 2 reads, because 1, it's equal or comparable in time and in price. If wave 2 takes you down around 61.8% of wave 1 and takes around the same amount of time. So 16 hours for wave 1. About 1 day and 16 hours for wave 2. Let's see. 1 day, 16 hours, that's 40 hours, right? Yeah. So 16 over 40. 16 over 40. I don't know. 16 over 40. Or am I reading this wrong? Is the... Okay, let's go on the smaller time frame. Let's make sure that I'm reading this better. Okay. This is an ending diagonal. Right here. So, I read that wrong. So, it'd be more like this. One day, 10 hours for wave 1. 1 day, 8 hours for wave 2. That works. Zilica. Let's zoom back out. Okay, Zilica's definitely a wave 1, wave 2 situation as well. Is that true? Yeah, that's definitely a A-B situation. Yeah, I think that wave 1 goes up here, and then wave 2, A, B, C, down there. Yeah. Okay, so Zilica, VRA, synthetics, they haven't done anything, but expect big moves from them. Ravane, I have to zoom out even more. It's just so volatile. But yeah, it's still at support. It hasn't done anything. Okay, Cadena, kind of like Ravane, almost carbon copy. It's still at support. It hasn't done anything. Let's zoom in. Yeah, it hasn't done anything. Let's see if we can't see any more detail. Yeah, I think it's in a wave 1, wave 2 situation, to be honest. Let's see. No, I think it's still corrective. I think this is all still corrective right here. Yeah, it hasn't even gone into wave 1, wave 2 situation right here. I think this is a 3-wave move. I want to say that this is a 3-wave move, but it looks like it's respecting the 0618. So it may be a 5-wave move. Maybe a 5-wave move. It may be already in wave 1, wave 2. Okay, doesn't matter. On the high time frames, these haven't done anything. They're still at support. They're yet to run, but they're printing, strong bullish divergence on the hourly, not on the 4-hourly, on the daily, yeah. And not yet on the weekly, but on the daily at least. Okay. 4-hourly. Okay. Litecoin. Litecoin is in an impulse. This looks like it's in a wave 4 correction. Maybe. I think this is quite clear. A wave 1, wave 2 situation. Took about the same amount of time to print wave 2 as it did to print wave 1. You're respecting the 0618. I think Litecoin is in a leading diagonal, a type of leading diagonal, where wave 1 and wave 3 are about the same size, but no. I don't like that as a leading diagonal because it's too orthogonal. Leading diagonals tend to be a little more slanted. So I would say, and typically leading diagonal, the retracement is a little deeper. The wave 4 retracement is a little deeper. What I would say is Litecoin's still in its wave 3 advance. If this was wave 1, wave 2, wave 3 is still going on. It's probably in wave 4 of wave 3. Okay? And so we can expect wave 3 to come up to this region, give you wave 4, then keep going. Okay? That's what I see for Litecoin. Let's just look and see in terms of pattern analysis what that means. Yeah, pattern analysis tells us that our target is going to be this right here. Because we just broke this resistance, right? And this is the height of this pattern right here. So Litecoin is targeting the tops right here. So around $64. Okay? So it's gonna make its way up in some way, shape, or form, with a series of impulses, if this is wave 3, whatever, to about 64. That's what I'm seeing for Litecoin. Okay. Like I said, Dogecoin had just kept going, and I think it's going to keep going until it reaches these levels right here of 9 cents. That just makes sense, right? Dodo just got started, but you see this is beautiful. This is quintessential bullish behavior where you're correcting up. You're doing one of these, so price action is doing one of these, meanwhile momentum's going down. That's people would say, oh, that's not bullish divergence, that's bearish divergence. Actually, no. In context of an impulse, that is very bullish, because corrective price action that's going up on the price chart but going down in momentum basically means that you're resetting for more runway to the upside. So that's what I'm seeing on Dodo. You're correcting up and resetting all while doing all of that. So yeah, this is going to fly. Let's go on the daily time frame, see what our next targets are likely to be, and I think it's quite clearly you're going to target the tops of this range, okay? This range that you've been in for 160 days. You're just going to target the top of this range. So about 22 cents, thereabouts, okay? How are you going to get there? I don't know. I don't really care. It's not that important, but it looks to me quite clear that you've been in some sort of impulse, okay? And that this impulse I don't think it started here. I think it started here. October 21st. Let's just measure this. I think this is corrective down here. Let's see. Yeah, this is totally corrective. You see it hit the 786. That's a flat correction right here. Your impulse for Dodo starts on the 22nd. Yep. So thereabouts, 22nd. You put in wave 1. I think this is a wave 2. And then this is a leading diagonal into wave 3. And then you're going to get a pop, go into wave 4, and then continue wave 5. Something like that. That's what I'm seeing with Dodo. XRP. So XRP, if you guys remember, it's one of the few assets that broke this range of consolidation reversal really early. And since you've kind of been putting in a consolidation on top of the range, really bullish, okay? But this, I think, is still all corrective. It's all corrective. It can't be impulsive. Why? Because the time it took for this to print is way shorter than it took for this to print. So you know it's a 5-3-5 situation. Okay, it's a 5-3-5 zigzag. So what I'm expecting for XRP in the long run is very simple. It's one of these. I think the next target is at least 73 cents up here somewhere. But I want to say that is even lowballing it, because we know even in zigzags, it's not always 1-to-1. Sometimes it's 1-to-1, 618. So let's look at our Fibonacci extension tool of this initial wave up, retracement of these 3 waves down, and boom, that phi ratio, that 1-618 would take us where, actually, would it? Let's see. Yeah, the 1-618 would take us where it makes sense. Do you see that? If we came up here, you then create this inverse head and shoulders. It looks nice. You know, there is something in Elliott wave theory called the right look. And I think in charting in general, a lot of times you see symmetrical, you know, aesthetically pleasing patterns. Nature just likes stuff like that. So I wouldn't be surprised if we got something like that. Let's see. Okay, one sec. I'm gonna take a quick water break. Guys, I hope you're enjoying and you're appreciating, or you're getting value from this. I would do this anyway, but I'm just doing this in public. This is what I do. These are the positions that I maintain, and this is how I manage and maintain my positions. I just do the best analysis I possibly can to understand what's likely to happen. And if it's going in the direction I want it to go in, I don't touch it. You know, I may manage the position, but I try not to overtrade. A lot of people are going to lose money in this market over trading it, meaning they're going to try to always, take profit. And, it's a bull market. If it's really a bull market, just get the hell out of the way. Make your buy, set your bid, and get out of the way. Don't worry about these intra-wave retracements. Just let it compound on itself day in and day out, day in and day out. Because if we're really impulsive, you're going to go up substantially more than you come down. And you're going to keep going up, come down a little, keep going up, come down a little bit. You reduce your risk if you just leave it. You really increase your risk if you try to trade in and out, in and out, and in and out. And look at all of these positions that I hold. Highly, it's just not feasible. It's possible, but it's stupid. I can make more money than I know what to do with just leaving all of these positions and waiting for a time that the market's overheated, generally speaking, and then selling off all of my positions all at once. Beauty of crypto, things happen in kind of in concert with one another. Okay, anyway, so XRP, we expect it to go all the way up here. So I wouldn't be surprised if when Bitcoin hits its 23K, we get a good 100% pump in XRP. Maybe 100%, yeah. 95 to 100%. Okay? And right now, looks like we're about to go. And this was, let's see. This looks to me like a good wave 1, wave 2 situation, right? The 618 was respected. This was 5 waves, 1 hour, 1 day and 20 minutes, or 1 day and 20 hours, long stream, sorry. Let's see. 2 days, 12 hours. Yeah, I could live with that. That's comparable. That's comparable. That's close enough. That's close enough. And what you got here, let's see. You know what I like better? I like 2 degrees of AB basing. So after all of this stuff, right? Here's my favorite read on this price action right here. So this is a nice complex correction, right? This is a WXY, right? A WXY. So this is a double 3 complex correction. And then all of this is an AB base, okay? And I'll show you the AB base. 2 degrees of AB basing. This is a cleaner read. This is 5 waves up, 3 waves down, right? It's not impulsive because, it's not as, 1-to-1 in terms of the time for this wave 1 and wave 2, okay? 5 waves up, 3 waves down. That is kind of a zigzag, right? And then you get 5 waves up for your second degree A wave, right? First degree A wave, first degree B wave, second degree A wave. And, this is your second degree A wave right here. And this is your second degree B wave, a running flat right there, respecting the 0618 of that second degree A wave. That is, and this is not a straightforward read. This is not something I'm like, ooh, I know exactly what's going on here. This was one of the most confusing positions that I've had in the past few days. I had trouble reading this. I didn't exactly know where it would retrace to, but given the latest price action, this is my favorite read on this. So we've basically had no impulsive price action in XRP, yet and still it's in a very strong position. The pattern analysis is quite simple. You have this nice W pattern that you're about to break out of. Simple. So that's my favorite read on XRP. Algorand, I think it's a little more straightforward. Again, you can see sideways price action leads to a resetting of the impulse or of the momentum. So sideways price action on the chart, resetting of the momentum, right, of the momentum wave. And I think here you have quite straightforward 5 waves up, 3 waves down. I've seen this before. I've measured this before. It's comparable in time for the wave 1 and wave 2 correction. If you take your Fibonacci extension tool, and guys, you see how monotonous, you have to really love this shit to do it time and time again, to do it. And you know, you have to be detail oriented and you have to show up all the time and you have to monitor it. It's really hard. People say, oh, you made millions in crypto, you must be very lucky. No, like I'm happy and I'm lucky. You know what I'm lucky about? That I like doing this. Because if I didn't, this would be hell. Absolute hell. Looking at these charts as much as I look at them and making these measurements over and over and over and over again. It's absolute hell if you don't like it. But I just so happen to like it. And it just so happens to be really lucrative. There's no luck. Very little luck. There's some luck, but you know, it's preparation. You guys have seen me. If you're subscribed to the channel, you've seen me get wrecked left and right. You've seen me be wrong. You've seen me learn. You've seen me grow. It's, you know, put in years of preparation. Anyway, first wave, second wave, third wave between 1618 and 2 Fibonacci extension. That's wave 3. This is a wave 4 correction, just as we expect. Wave 2 is relatively simple. Wave 4 is relatively complex. We're expecting wave 5. Zoom back out on the daily. The pattern analysis implies that we get a target to the top over here based off of the breaking of this resistance that we're now retesting as support, which should look something like this. Yeah, you should get into this region. Yeah, that's algo. You're coming into this region, and once again, a lot of people are going to get surprised because they're going to see Algorand and other altcoins go up, you know, in the next few days, 20-30%. Algorand, I think, is going to do a 20% move, but shortly thereafter, after some consolidation, is going to put 3 waves down back to where we are at present, right? Because that represents a 618. That's just how it goes. Unless this target, these pattern targets are just intra-wave targets. Unless we go much higher, we come back right down here. Okay? Nothing's for sure. I don't know. But just, you know, worst case scenario that I'm sort of preparing myself for is we come up here in 5 waves and we go down for 3 waves and we come right back where we started, right there. And I'm still okay. Alright, and last but not least, Telcoin. It's one of those more volatile, high market cap coins. You know, like in the hundreds. We haven't done anything yet. We're still at support. And these are going to break out as they tend to break out really in a volatile manner and then just start running. And then you could, you know, don't be surprised if these assets, Dodo, the Telcoins of the world, put in 50, 60, 70, 80, 90%. That's pretty much it, guys. Hope that was helpful. Hope that was useful. Marie says, should I 100x short BTC right now? No, absolutely not. Young Dasa says Zcash. So let's have a look at Zcash. You know, yeah. Some people are gonna really feel it. You know, if you wanted to go short, I don't know. I don't like going short. I don't like trading against the grain. I've done it before. I've tried everything, you know, to make money. Scalping short and stuff like that. but it's too much risk. It's not worth it, you know, because even if you know that you're coming in and you're gonna pull in a move down to the minimum of a 236, you can put that trade in, but it's still it's there's too much noise, and once you set your stops and your liquidation points in that region, you know, if whatever trading range I have, I like my stops and my liquidation points, whether it's long or short, to be outside of the trading range. Right? For such a small move, you need high leverage to make it make sense. Either a lot of money or high leverage. Either way, you're taking a high risk. So I just think that is not something you want to trade. You can, but it's just too much risk involved. It's better to just trade the trend. It's better money, lower risk. That's exactly what you want. You want that combination. Better money, lower risk. You see the trend going, then you just keep going with the trend. And if you do want to counter trade, you would counter trade once you count 5 waves up. You know you're going to get 3 waves down to a minimum of the 382. Even then, I would say it's a little risky, but you know, if you had to counter trade, that's what you want to counter trade, the primary retracement. Otherwise, these, you know, you just wait for it to keep going. And again, it may not stop here. It may keep going because we're in a bull market. And my projection, again, is $1.7 million to $4 million for a Bitcoin. How it's going to get there, I don't know. But I think that's still a viable projection. And that projection is no different than the projections I make on a small time frame. That's the beauty of Elliott wave theory. When we project wave 3, using, you know, wave 1 and retracement of wave 2, and that keeps hitting time and time again. If you look at, you know, I go through all of these coins every day, hours and hours and hours. How many times do I pull the Fibonacci retracement or extension tool from wave 1, wave 2, and wave 3 hits right in this region? You can do that on any time frame. If you do that on a higher time frame, you get 1.7 to 4 million for Bitcoin. So I wouldn't mess with fading the move. I know Maurice was joking when he said that, but just saying that in general. So let's have a quick look at Zcash. Zcash. This one. I had a meeting at 2, but it got canceled. So that's why I'm like taking my time and did I say 2? I originally had a meeting at 2 and it got canceled. So I was gonna have a tighter day today, but since it got canceled, I just took my time, came on stream at 2, and now I'm just charting for hours and hours, just like old times. Even, you know, when I get paid out, I think I'm still gonna do this. I don't know, maybe not, but I might still continue to chart a lot. Maybe I'll chart less. But this is how the money is made. At least this is how I've been making money so far. Just, you know, diligence in my analysis. All right, let's see. Zcash. High time frame. Ooh, messy chart. I don't like messy charts. Okay, let's just focus on this. Looks like it's going to be a nice W pattern. This is one vertex. This is the second vertex. I see some bullish divergence. I gotta go on the week. Let's try that again. Yeah, nice bullish divergence. Okay, so some projects you're seeing this. I think you're seeing it in Bitcoin, but this is strong. This is really strong. This is strong bullish divergence on the weekly time frame. It's just been confirmed right here. So the cross of the K and D lines confirm your divergence. So again, lower lows in price action, higher lows in the stochastic RSI momentum indicator. Okay, so strong confirmed bullish divergence on the weekly time frame. It's like seeing a zebra in the middle of Times Square. Okay, maybe Times Square you might see some weird stuff, but it's like seeing a zebra in the middle of, winter in Mississippi, right? Something like that. Something weird. You don't see it every day. Maybe the circus is in town, but you do not see this every day. Okay, so that's high time frame. Looks really bullish. Zoom in a little bit on the daily. Let's see. Okay, I see that this impulse. So I just did the 2 degrees of AB basing in my head on the daily time frame. I just read that out. I'm not going to bore you with it. But I'm seeing that the impulse, the 2 degrees of AB basing are finished over here. Whatever this date is. October 13th. Okay, October 13th is, again, a day that you see the bull market start for some assets. Other assets is anywhere between October 21st and October 24th. That's just based off of the work we've been doing on my watch list. And so, yeah, for Zcash, I think that was the start of 5 waves up. And again, when I say the start of bullish momentum, I'm not kidding. I mean that from here on out, for many months, you should expect to see 5 waves up, 3 waves down. 5 waves up, 3 waves down. Like, people wonder how you get, 10,000x or not 10,000x, 10,000% gains. So 100x, 200, 300, 400x. It's because you keep getting impulses and retracements, and then impulses and retracements, and impulses and retracements, and it just keeps compounding. It's compound interest, right? The 8th wonder of the world. That's how you get those massive, crazy, insane gains in crypto. And so I think that this is the start of it. October 13th right here. And if we jump down on the 4-hourly time frame, we can see... okay, that to me looks like a wave 1, wave 2 situation. Or maybe a B situation. Let's see. Let's measure this really quickly. That's the beautiful thing about using time. You can really, drill down and make sense of some patterns that you see, if it's corrective or impulsive. Just looking at it here on this time frame, I want to say it's corrective here. It's almost exact. So I would say this is corrective, but it's unlikely that an A wave and a B wave are so symmetrical in time. Do you see that? So this is an ugly 5 waves. Yeah. I think this is 1, 2, 3, 4, 5 with an ending diagonal wave 5. And then you're getting some sort of flat correction here. But both took 4 days. You're respecting the 0618. So I think this is a wave 1, wave 2 situation. And you are in the middle of printing wave 3. Let's zoom out. No, let's stay on this time frame. Let's use our measurements and say that this is wave 1. Wave 2's down here. I think you're in the middle of wave 3. Like I said. Okay, I think this is wave 1, wave 2, and wave 3. This is wave 3, wave 4, and wave 3. I think you need to put wave 5 in for wave 3. And that wave 5, pattern analysis says that this wave 5 is going to look something like this. Okay, and again, that wave 3 is going to take you in between the 1618 and the 2 Fibonacci extension. Okay, so let's just do that measurement and you can prove it to yourselves every single time. Not every single time, but more often than not, right? So the people who came up with these guidelines know what they're talking about because they've seen it time and time and time again. And I think the only way you can make money off of these things is not reading it in a book, but seeing it time and time and time again yourself enough to be able to put money on it. Like, you will not, I guarantee you will not risk $1,000 or even $100, maybe $100. Maybe you won't risk $500 on something unless you know it. Okay, maybe you may act crazy and you may make a bet and you try to gamble once or twice, but let's say your last, few $100s. You're not going to risk your last few $100s on a bet or on a trade unless you're really, really confident. And how do you get confident? You keep reading, and you see more often than not, if you take wave one or what you think is wave one, okay, and that's why I'm measuring the time and everything like that. I'm trying to get really sort of careful about, what I call a wave one or wave two. But this wave one, wave two, we measure the time, we measure the price, we like it. Wave three should come between wave 1618 and the 2 Fibonacci extension, right? Balance of probability. And that's exactly what we projected it to do using the pattern analysis, right? This, whatever this is, a W pattern, breaks out. This line right here is the height of this vertex right here, which gives you a target between 1618 and the 2 Fibonacci extension, which would conclude your wave 3, and then you get a wave 4 correction, and then you need one more leg up to complete your Elliott wave. And again, that last leg up can be expanded. So it's tough to say in a bull market, oh, it's going to end here. That's the challenge, right? People who want to short, they're going to have trouble knowing when to short the market. The people who want to go long, they're going to have a higher probability of success, higher chance of success, because more often than not, you're going to have extensions. You're going to go higher than even those intra-wave corrections suggest. So that's what I'm seeing for Zcash. My next target for Zcash is about 64. But if you're smart, given that this is the bottom of a bear market, macro low, you've already entered, or you're entering now, and you're not touching it. Again, if you're smart, you're entering now and you're not touching it. You're putting in your position now and you're not touching it, whether spot or leverage. You're making sure that you're hiding your stops and your liquidation points beyond the 618 retracement level. So let's say, okay, there's a little trick. It's a little more advanced, but here we go. I've said this before on the channel. If you have a wave 1, you can already project a minimum wave 5. If you have wave 1 and wave 2, you can project a minimum wave 5. That minimum wave 5 extension is going to be the 2236. It works out mathematically. I'm not going to derive the mathematics of it, but you can figure it out for yourself. And again, you have to figure it out for yourself if you're going to put any money on it, or else you're not going to trust yourself enough to do that. You're going to fuck with the trade, or you're just not going to do it. But you target the 2236. Any extension, any 53535 extension must hit a minimum of 2236. So let's just say you put in $10,000 on Zcash right now, and that $10,000 could be 500 of margin, or 500 position size, and then you use margin or leverage to increase it to a five-figure trade. Okay, so you're gonna have a stop and a liquidation point, right? So this is a little risk. But let's say you can bet, given wave 1 and wave 2 and everything that you've read so far, that this is impulsive price action. You're looking at your volume and you're seeing that volume's increasing. You're looking at Bitcoin, what it's doing, right? You're likely to hit this 2236. And what you're going to do is, to know where to hide your stops in your liquidation points, you're going to take the bottom of wave 1, or what you perceive as being wave 1, all the way to 66, right? Let's just say it's 66. 2236 Fibonacci extension, okay? That's the minimum extension that this can go. And what you're going to do is you're going to hide your stops and your liquidation point below the phi ratio, the 0.618. So let's say it goes 1, 2, 3, 4, 5, right? A basic 53535 extension, and then after it goes 1, 2, 3. It can only come, if it's an actual extension, it can only correct down to the 0.618. So you want to hide your stops and liquidation below that. That's it. Is that 100%? No. Is it like 95%? Yeah. 95% of the time, if your read is right, you're fine. And so then you just chill and you wait a few months, and then you're a Brazilianaire. So yeah, that's Zcash. That's it, guys. If there's nothing else, we'll call it a stream. Marie says, how long do you think it will take BCH to go to 2K? 2K, let's see. See if we can't answer that. So first, let's get BCH on here. BCH. What the hell does the N stand for? Is that Bitcoin Cash? That always confuses me every single time. Is BCHN Bitcoin Cash? Okay, probably not. Let's just... What the hell is Bitflyer? Anyway, let's use this because it's calculated by TradingView. Ew, no. This is the worst chart I've ever seen in my life. There's no data. Let's see. KuCoin. Okay, I like KuCoin. Alright, let's look at this. Let's get rid of this. Let's look at this on a high time frame. So Maurice wants to know when you think Bitcoin Cash can reach 2K. Okay. Let's say Kathy Wood, or some hedge fund or some sort of venture capital firm wanted me to answer that. Okay, as an analyst, I go in and they say, okay, when do you think it'll hit 2K? I say, I don't really know, but let's see if we can't find out. First and foremost, it's hard to project. Why? Because we don't have any clear impulsive price action. I have a bunch of wicks here, but I can't read that. I don't know what this is. I'm assuming that this is some sort of impulse and this is some sort of correction. So if this is corrective, then it's kind of part of a zigzag, a 5-3-5 move. If it's impulsive, then I don't know. So let's try and pull out another chart and see if we have better information. BSV, right? Is Bitcoin Cash another name for Bitcoin Cash? BSV, Bitcoin Satoshi's Vision? It's confusing. It's really confusing. Let's see if Coinbase has a good Bitcoin Cash chart. Okay. I used this in the past, so this must be as good as it gets. I think I did this a while ago. Because I don't do that anymore. That doesn't look like something I would do these days. I was reading an expanding wedge that was likely to break down. And it broke down almost exactly where you would think it would break down. Pretty much, yeah. The base of it. So yeah, in response to that question, I can't make any projections on something that doesn't already have impulsive, like I need impulse before projecting an impulse. So if you want to project wave 3, you need wave 1 and wave 2. If you want to project wave 5, you need wave 3 or wave 1 and wave 2, right? There is no impulse. This is all corrective. So I can't answer your question, unfortunately, Maurice. At least I can't in, using technical analysis that I know. Maybe there's some technical analysis out there where you can make projections without impulsive price action, but I can't use a Fibonacci extension to project any price here, because this seems to be a massive flat correction, right? 1, 2, 3, 4, 5. And then a consolidation reversal pattern. So I would say this. 2000 is a very conservative target for this, and I'll tell you why. Whatever this is, you can say it's a range of price, right? Typical flat correction. And why do I say 2000 is conservative? Because if this is corrective, right? This range right here that you see is corrective. Any impulsive price action, by definition, is going to break up and out of this range. So I would say, at the very least, if we are going in a bull market, right, this would be your minimum. This would be a good target for like a short-term target. 20, what is this? About 3,500. This is the top of the range. And what's likely is that you get to the top of the range and you put in some sort of correction, maybe a wave 4 or wave 2, I don't know. And or rather, what's more likely is you get to the top. I don't know what you do. Maybe you reject a little bit, you break, and then you retest. That's probably more likely. You go up, you reject, and then you break. But you do respect the fact that this is long-standing resistance, and it's been long-standing resistance for the life of the asset. So that's a 4-year resistance, given the channel that you formed. So I would expect at least a modest rejection here, but not something massive. Okay, so a modest rejection, a break, then a retest. But I think that we're going to spend a decent amount of time with this asset around between 2,000 and 5,000, let's say. That's my best answer, given, the chart history. I don't have much more information to say more. I hope that helps. Marie says, video description. Okay, yeah. I'll put my wallet address in the video description. Sorry about that. Video description. Yeah, I'll do that after the video. And he says, thanks anyway, much appreciated. I'll just patiently wait and sell my booty in the meantime to pay the bills. Oh, that's funny. Oh man. But yeah, I don't think this is gonna take too long, guys, and I'm gonna tell you why. I know it seems like it's gonna take forever because it's been so long and we spent so much time at 2000 and all that stuff. But let me tell you why I don't think it's gonna take that long. It's gonna take a lot shorter time than people think, and a lot of people, even quote unquote professionals, who do this for a living, who claim to do. A lot of people don't do this for a living. A lot of people say they do this for a living. They don't. They're living off of referral links for exchanges. They're living off of partnership sort of kickbacks. They're living off of other things, not trading. Very, very few are living off of trading. But I mean, that I don't care. That's not like I feel bad or anything like that. I'm just letting you know, as somebody who does this for a living, and I have colleagues, other YouTubers, sometimes reaching out to me, talking with some of them. I know for a fact they do not do this for a living. I'm going to tell you that, not to big myself up, but just be careful. Always do your own research. Do your own research. You probably already know this if you're listening to this channel, but a lot of people just they have no clue. It's not like they're a little wrong. They have no clue, not even the least bit. Okay, and they're saying, for 2023, we're probably gonna go as high as 25 to 30K, right? But here's why this shouldn't take long. Just mathematically, right? Judging by the analysis, and again, I'm gonna trust the analysis. It hasn't led me wrong yet. I've made mistakes, but by and large, the analysis is held up on the small time frames and the larger time frames. So here you go. This is the master plan, and it seems like, we've been at this level forever. And yeah, this is on the monthly time frame. 1, 2, 3, 4, 5 monthly candles at this 20,000 region. Okay, but again, and I said this in the beginning of the stream, most of the time you're not in impulse. Most of the time price is in correction. It's in consolidation. So your task as a speculator, as a market analyst, is to figure out what is the next impulse, the direction of the next impulse, and that's it. Because most of the time is spent doing this, just like we've been doing for the past 5-6 months. And once we start moving, that's when it's like day after day after day, like 20%, 25%, 30%, 40%, 50%, and then correction a little bit, and then keep going. People forgot that is how price moves. That's how you get from these $11, $25 to tens of thousands of dollars where we are now. Okay, that's just how price action moves, and if you study price action, you understand that. You're not confused with 6 months of sideways price action or all that stuff, right? So the next target, like I said, is very likely to be in that 1.7 to, I would say, 4 million range. Okay, and again, you see here, it's a throw over, as Ralph Nelson Elliott would call it. If you channel it and you go above a little bit or below the channel, that's likely. Okay, so it's a throw under and a throw over. That's a throw under. You can see we haven't yet moved, but we're at the bottom of the channel. If we went on the top of this channel and went a bit above, that's also okay, and that's also very normal. That's a throw over. Okay, and again, that target's between 1.7 and about 4 million. But the timing is very, very clear. The timing of that is about, let's see, I have February 19th. Okay, if you go on the smaller time frames, I have it written on my whiteboard. February 19th of 2023. So anywhere around Q1, late Q1, mid Q2, I do believe we hit those targets. And then we come back down and we bottom for the halving, right in time for the halving. I don't know how it works. It just so happens to work that the halving is likely to be in April of 2024. So that's why I will not be surprised if it only took 5 to 6 months to get to those figures that I've been quoting. So it doesn't take that long. All right, that's it, guys. I hope that was helpful. I hope that was useful. Have a nice rest of your day. Keep at it. Keep grinding. This is when you do all your work. This is when you do all of your effort, and then you reap the rewards in the coming months, right? Trading takes patience. It takes persistence. It takes good perspective. Few have it. That's why not everybody makes a ton of money in crypto, but some do. You guys show up every day. Even if you're not doing analysis, you show up and you listen to analysis and you think for yourselves, you're going to make it. It's not a question of if, it's a question of when. All right, that's it from me. Take care.